After 4 years of day trading in the stock market, realizing all the upsides and downsides and the risks that have come with it, I want to share with you today the 4 simple steps to overcome to help you become a profitable trader and master the art of day trading. The first step that you need to master in order to become a profitable day trader is the skill of risk to reward and probabilities. When mastering the rule of probabilities, you need to first understand the upside and the downside to the trade that you're looking to take on before you take the position. Once you realize that positions come with risk, you know that there's a R to R in every single trade that you're looking to take. When you know your R to R before you take the trade, you're able to realize what your max loss and potential upside will be of that position. A simple example for you to understand is a $1,000 position size. If your max drawdown is 10%, meaning that you're willing to lose $100 on that trade, but your upside that you're potentially looking at is 30% or $300 profit, then you'll realize what your maximum risk and maximum upside potential will be. Now it's up to you to determine whether or not that position is worth taking on in the split second before you click the button buy the ask. Realize when you take that position, there's no going back. From there on, it's either up or down. It's like a roller coaster. You're not going to understand until you actually take the ride. You're either going to take that loss and be disciplined, or you're going to see that upside move and reap the benefits. Mastering the rule of probabilities is simple but difficult and messes with your emotions. Once you're able to master this skill, day trading will become a lot easier and help your chances of profitability increase by much more. The second step to mastering day trading is understanding position sizing. When you see these large numbers people post on Instagram or on their story every morning at 7 a.m., after the first 30 minutes of the market, they made $15,000, $20,000, $40,000, and so on. You think that day trading is a reality where you'll make so much and be sitting on the beach, living the life, sipping on a margarita, but that's not the truth. If anything, that's the furthest from it. You're gonna have to start off with a small position size, maybe $500, maybe $300, maybe even $100, to the point where you're trading one contract, mastering the basics. What will come in turn of you being disciplined in taking those small position sizes in the beginning? You'll be able to master these 4 steps that I'm about to give you in a simple manner without being able to put on all this unnecessary risk that you don't need to put on, without having all this weight on your shoulders and stress of thinking that you're going to blow your entire life savings. Because for most, that's the reality in the beginning. They're not able to manage their emotions. They're not following along the right footsteps and path to actually reaching profitability. How can we overcome this? Starting with the small position size of $200, $300 can help you understand the type of day trader you are, what you're able to do, what your strengths and weaknesses are. Once you're able to understand your strengths and weaknesses, you're able to capitalize off them. And you'll only be able to do that if you start off with small position sizing. That is why understanding your position sizing is so important. If your entire account balance or portfolio value is $1,000, plan on taking a $200 position size consistently, and maybe once your account grows to a $2,000 overall value, then you can scale up to $300. If your account size is $5,000, start off by taking a $500 position size, and as you grow, you'll continually be able to increase that position size, and you'll see the gains come quicker. But do not rush the process. This is a must. Step number 3 actually has 3 components to it: greed, euphoria, and emotions. Greed, euphoria, and emotions are the 3 hardest things to overcome when it comes to day trading. In the first stages of your day trading career, you're gonna have that greed factor. You're gonna want to screenshot thousands of dollars in profit and send it to your friends every morning, or post it on Instagram so people can think you're a millionaire. So that way you can fly to Dubai next weekend and drive the most nice supercar that you can find. But guess what? In reality, if you live like that, if you think like that, when it comes to day trading, you'll lose everything consistently, over and over again, until you're able to break the chains of the mindset of greed. Now, euphoria could be the best thing that can happen to you and also the worst. It could be your downfall or your uprise. You have to be able to control the euphoric state of day trading. Most people put all the money that they have in because all they can see is the upside potential with day trading, but they never want to look at the downside. If you're able to see the downside before, you're able to think logically enough to not put your life savings in and blow them right away. If you're able to do this, you'll lose the negative connotation that people give to day trading instantly right off the bat because they don't think before they do. Overcoming the euphoric state is one thing that beginners need to understand before taking on the path of day trading. Once you overcome the euphoric state, that is where you're able to see where your potential lies. So, when you first start, and this step matches into the second step that I told you about position sizing. If you're up tons of money on a trade, if your account goes from $200 to $2,000 within one day, you do not deserve to scale your size up all the way to $1,000 position size per trade. You have to have enough humility to realize that it was luck. Now, everyone has lucky moments when it comes to trading, but if they push that luck into the next trade over and over again and expect only the greatest things to happen to them, that is where their downfall will begin. Now, the last component of step 3, managing emotions. Before you take on a trade, and when you're in the trade, you'll actually have the most emotions. Once you click the button, everything in your mind switches. You'll simply go from being so confident in the trade that when the trade goes 10 cents against you, you'll start feeling that fear to gather up in your heart and gather up in your mind. That sense of fear that you can smell. It's so far away. You're barely down on the position, maybe 1%, maybe 2%, but you think everything is going wrong. And even vice versa. You may be up 10% on the trade, and all you want is more. So you add to that position, and all you can think about is the glorious 200% gaining trade that you long and hope for. But that's not the reality. Come to find out, you aren't thinking logically because you didn't plan and think ahead before you took that position. This could lead to your downfall as well. You have to plan out every single trade before you take them. And that is why in our Discord, we give exact entries on where you should take the position before. We don't just type in the Discord and tell you, enter calls here, enter puts here, so that way you can be in the fear state or euphoric state or greed state. You want to eliminate all emotional factors, and the only way to do that is having a plan beforehand, and that plan beforehand will solidify your success and growth in day trading. Step number 4, and the final step to being able to master all 4 steps required to become a profitable and honorable day trader. This step is the step that you must follow in order to sync all 4 different steps in total that I gave you to become profitable in mastering the art of discipline in day trading. Withdrawing profits. I've seen people take their account from $10,000 to $3 million and blow $2 million in a day because they simply wouldn't take or withdraw profits. In all actuality, none of the money in your portfolio is really yours until you withdraw it. Without withdrawing that profit, technically it could disappear within one trade. One mistake that you made, one step that I gave you that you don't follow could lead to your demise and downfall of all the hard work that you put in for months and months, and maybe even years. If you're able to follow this simple step, this is the last risk that you're able to minimize, and if you minimize it, it's like protecting the queen on the chessboard. Now here is a simple example of exactly what you should do to withdraw this profit and minimize your risk. If you started out with a $2,000 account and your account has now grown to $10,000, what you want to do is withdraw $6,000 so that way your account balance is now at $4,000. What you've done is withdrew your initial investment times 3. You'll have $4,000 profit on the side not including the $2,000 that you initially invested, and your portfolio value will still be $4,000, meaning that you'll still be able to trade. And the benefits of this is that you won't size up too fast, you won't be able to blow your profits, and even if you were, which hopefully not, blow your entire account, you would still have even more to put back into that portfolio and risk. Now that you have the 4 exact steps that you need to follow in order to become a profitable day trader, all you have to do is take the action and do what is required. Now, I want to dive deeper into how exactly you can master every single art of day trading, because there's many different strategies that are shown to you, whether it's candlesticks, whether it's patterns, but the truth still lies, and I will deliver that to you guys as soon as possible. Make sure that you guys subscribe for more content, because this surface level is just as tiny as I can give you, so that way you can begin your journey in the right way. I hope you guys enjoyed, and I'll see you on the next one. My name is Dayton Renaranama, and I hope you guys enjoyed.